Hi everyone, I am developing a algorithm to trade the 9 EMA continuation trade, and I just wanted to go through a trade that I ended up not taking and just kind of walk you through that thought process and then kind of show you what my algorithm is saying as we go along the way. So this is going to be your first move up through pre-market support on the open at 931, and we're just going to take it candle by candle. So we get a new candle, and I'm just monitoring the data inside of here. So our RSI is currently at 86, and so on every new bar, we're just going to keep stepping through. I'm gathering more data through my algorithm, and we're just kind of waiting to see sort of a threshold. So we're at 90 RSI right now, so RSI is very high, and we're just looking for a pullback at this point. So we're coming into 935, still collecting data, and another really big move up, came in at 90, almost 93 RSI, and we're just stepping through here again. So we're starting to top out now. Looks like at 937, we get our first red bar, and we're still looking for this pullback into the 9 EMA. So we're starting to get this pullback here. And so sometimes you'll get like maybe 3 consecutive red bars as it kind of slowly pulls back into the 9 EMA. But we're still pretty far away. You can see that our distance percentage from high of day is 38%. So still very far away. So this is a very interesting candle, and I like to think
Alert
of this
MU prior bar EMA 9.
as sort of almost like poker, where every new card that you get on the table is giving you information, right? It's changing your expected value, and it's just giving you more information on how you want to play it on each new bar. And so we got a pullback, so it came within 5% of the 9 EMA. It did not touch the 9 EMA, which is something that I always look for. And it also did it fairly aggressively too, putting in this doji candle. So you can take this prior bar, risking the low. But if you do that, and maybe it comes here, does that prior bar break, it still could come and touch the 9 EMA because it didn't touch the 9 EMA. So I think a lot of people will get involved in this rebid candle. But I do not. I wait for the prior bar breaks. You see that the risk to reward ratio here is 0.44, which means that your risk, assuming you're risking 2 cents below the low of this doji candle and a high of day, is 0.44. So it's not very good. I like to see a 1 risk to reward. So high of day for the 9 EMA continuation tends to be a resistance area. So your expectation is that you expect that it will continue past high of day, but sometimes it does not, and you end up having to get out near high of day, or maybe low of high of day if it starts consolidating and then breaking down, losing the 9 EMA. So if you're only doing a 0.44, like it's just not good. It's not very good, and if you do take this, I do think that you should be doing it on a lower risk amount. So ideally, we just want some more inside candles being put in here. So we'll just continue. And so we did get an inside candle, so that's brilliant.
Alert MU prior bar EMA
So we
9.
get our new data here. Now our risk to reward went from a 0.44 to a 0.77. So your risk to reward got so much better just by waiting for that extra candle. So we're going to take the entry on the prior bar breaks. And so ideally, we want this low to be put in here, and then it just start consolidating for a few bars, getting real tight risk to reward. Your expected value is going to be much higher, and then you can take it on prior bar breaks, and then we should get like a big move up into high of day, and then we'll kind of see from there. So we'll just wait for this next candle. We're going to take it on prior bar breaks, stop below the low of day. So this is a unfortunate candle.
Alert MU prior bar
And
EMA
this is where I
9.
go back to my poker analogy of this is not the card that you wanted to see turn over, right? So what happened here is you had this low that had been established. This was 101.77, and now the new low got put in at 101.65. So we broke through that low, and so I kind of keep count of these, how many times it's breaking that low. I'm wanting that low to be holding, and it's not. So we got a break. However, it's still holding the 9 EMA. It's opening above the 9 EMA. We did get a little bit of a penetration. You see an 8% penetration, but it's still closed 5% above the 9 EMA. Risk to reward actually went down a little bit from 0.77 to a 0.74, assuming again you're risking 2 cents below this prior bar candle. So yeah, if this starts continuing to, like, I really would not want to see this. If this comes and breaks again and does another break, like, I probably wouldn't be interested in this because it's just being too choppy, and I want to only trade clean price action. So yeah, ideally this new low is going to be held. The 9 EMA is going to continue to hold, and maybe we put in one more bar here to get our risk reward even tighter, and then our stop is going to be below here, and then we'll take prior breaks. So we'll just go for the next candle, and you can see that's not the candle we wanted at all. In fact, this is a no entry candle for me. So let me just run these stats.
EMA 9 2 deep penetration.
Yeah, so not sure we can see the actual data here. I'm not sure if we can see the data here, but so we had this pretty big penetration here back into VWAP. So maybe this is going to be a VWAP continuation type of trade now, where you'll want to see that consolidation start happening at VWAP. But in terms of the 9 EMA, this kills the trade for me. Even if it gets back above and starts to reclaim, like, I am done with this 9 EMA. So this is just kind of like how I think about trading these types of 9 EMA continuations, things that my algorithm is showing me as well. See, we had a 25% pullback, things like that. So I'm just kind of looking at this data as new bar becomes available, and then adjusting my expectations and adjusting my size as well. So it started out with a 0.44, not very good. So if you do take the trade, it's going to be on lower risk. Then you get a 0.77, so you can actually increase your risk since your EV is now higher. When we get a prior break from that low, like, that's not ideal. So maybe I want to lower my risk again. And then if it starts, consolidating, gets you better risk to reward, starts holding this low and then pushes higher, perhaps you want to raise your risk a little bit as well. So all these things you're wanting to do in real time, and it happens pretty fast, which is the reason why I'm writing an algorithm to handle all these quick logic changes. But yeah, just wanted to step through all this, and let me know if this is helpful.